Everyone, today's video is probably going to be pretty short, hopefully. What I'm going to be doing a video on is going to be on insurance. So when you buy a car, you have to have insurance. If you don't have insurance, you could definitely be sued if you get in an accident by someone that has insurance or that you injured. Also, you can get in a lot of trouble by the law. The most basic coverage that you have to have is liability coverage. And liability coverage is the first option that we're going to be looking at. Essentially what liability does is it covers the other person's car if you're responsible. So let's say you were driving along and you hit someone. The liability will cover their car, but it will not cover your car. So liability, although it can be great for the other person, it's not so great for you. But that's the bare minimum that you have to have. The second one is collision. So collision coverage covers you now. So it covers your car and what accidents or what happens to your specific car. So even if you're at fault or another person's at fault, it will cover your car as well. The one thing it does not cover is natural disasters. So just be very, very careful here. If a tree falls on your car or your car gets flooded in a rainstorm or something like that, it does not cover natural disasters. The third one is comprehensive. Comprehensive is kind of the golden standard for insurance that you really want to have. Comprehensive covers that natural disaster or things that are caused by Mother Nature. So let's say there's a patch of dry ice on the road and you accidentally swerve and you end up in a ditch and your car gets totaled. Comprehensive would be the item that would help fix it. Or let's say you leave your car out in the sun. There's a lot of sun damage on it and it wears your engine out, wears, your brakes out, whatever it does, that would also be comprehensive. So that would really cover it. This is essential if you have a newer car. If you have an older car, sometimes people opt out of comprehensive because comprehensive does cost a lot of money. Liability and collision are usually fairly inexpensive. It's when you get to comprehensive that can add a little bit more money to what you have to pay. Okay, so these are the main three. So liability, collision, and comprehensive. We have two additional coverages that would be something that you might want to look into. And those are personal injury or uninsured or underinsured insurance. So personal injury is basically what it will cover for any medical bills if you get injured. So let's say you have whiplash or maybe you break a bone, your personal injury will cover those medical bills. Now, remember that if it's not your fault, then the other person's insurance should cover those medical bills. So this is more if you are at fault, right? It will cover those injuries. Or maybe if there's a huge, huge accident and you need a lot of coverage for personal injury, this will really, really help it. The last one is the uninsured or the underinsured. So the uninsured or underinsured insurance is really great for those just in case accidents, meaning that let's say you're not at fault, someone hits you and they have no insurance. This is where this insurance would come in play. So you get hit by an uninsured motorist, or let's say they have a really, really low insurance. Like they have like the bare minimum insurance and it's a huge medical cost or huge accident and it totals your car. If you have underinsured insurance, this can also help those damages to the car. So this could be a really, really key one if you think that you might get into a major accident or you might accidentally be hit by someone that doesn't have insurance. So let's go ahead and look at a scenario, two scenarios of what might happen if you have to pay for insurance, whether you're at fault or not at fault, okay? So we're going to look at this first example. So number 2, it says Alicia has a deductible of $325 and a bodily injury liability coverage limit of $50,000. So basically what that means is that if she chooses to use the insurance that she has, she will have to pay $325 to use that insurance. But the insurance does cover up to $50,000. So let's say she gets in an accident, it's her fault. Up to $50,000 will be covered as long as she pays that deductible of $325. So here's the scenario. She hits another driver and injures them severely. The case goes to trial and there's a verdict to compensate the injured person of $40,000. So Alicia only has to pay $325, which is her deductible. And then the rest, the insurance company is going to pay for. So her insurance would cover that $40,000 minus the $325 that she paid. And so they would essentially cover the rest of the bill. So again, really important to have insurance. Now let's look at another scenario. So same situation, but just before the accident, Alicia actually reduced her policy from $50,000 to $25,000. So what that means is that instead of covering up to $50,000, only covers up to $25,000. Now, this is what people do to try and reduce their monthly payments. And so you do have to pay on a monthly basis for your insurance, or you can also pay on a yearly basis or semi-annual basis. And so a lot of the times people can't afford those rates. And so what they'll do is they'll reduce their coverages or increase their deductibles. And then this will help reduce those monthly payments. So let's say she decided to reduce the $50,000 to $25,000. So now what's going to happen is, remember that this person was owed $40,000 because this is a major accident. So now what she's going to have to pay is she's going to have to take the $40,000 minus the $25,000 that the insurance company will pay for. And that will be $15,000 plus her deductible for the insurance company paying that $25,000. So she is going to be responsible for not only the deductible, but also the remaining balance. And so the remaining balance is that $15,000. So now her situation has increased drastically. You can see that the first scenario, she only paid $325 because her insurance covered up to $50,000, and now she's having to pay $15,325. So a lot more money. And her insurance company will obviously pay the remainder of the amount that's due. So when in doubt, it's always good to have insurance, especially if you have a newer vehicle. So when you're looking at different scenarios or situations, try to opt on the side of caution, meaning that you do want to have probably a lower deductible and a higher limit if possible. If not, try to keep that limit, but increase the deductible so that at least that limit will cover for major accidents. And that's kind of what the insurance is for. It's for the what if scenarios or just in case scenarios. Because we know on a day-to-day basis, most of us will probably not get an accident, but over the course of our lifetime, we're definitely prone to accidents. So just remember, there's 5 different types of coverage. Remember that deductible is what you have to pay if you're going to actually use the insurance, and the insurance have different limits based on the different coverages. So liability will have a different limit, collision, comprehensive, personal injury, and then uninsured or underinsured. And those limits can adjust and either save you money on a monthly basis or increase your monthly basis amount that you have to pay. So I hope that you learned a little bit about insurance, automobile insurance, in this video. Like I said, it was a pretty short video, so I will see you guys later.